Daily outlook into Thursday, June 11th. We can start by seeing that the previous day here was an inside bar, but was nonetheless an expansion phase. You can see the big down close candle here through essentially disrespecting here the discount wick from yesterday. We'll look at the lower time frame dynamics on when we look at the 3-day look back. But looking at this price action currently, to me this doesn't yet favor a move higher. Yesterday created high resistance inside of the range, and so I believe that the market will want to trade lower. Okay, where? Well, if you're looking close, what's in proximity of the current open, obviously, right here, these are the levels of the weekly fair value gap. In the upper half, we have the range of a bullish fair value gap, and in the lower half, there is another one, right? And so far, the one the one in the lower half of the weekly BISI still hasn't been traded to. Okay, so if the market will keep trading lower today, I think that this can be a low-hanging fruit objective for shorts. And you can see that this is paired with an order block. The order block cuts from 75% to essentially the low of the weekly fair value gap. So I think overall, if today we'll look at those dynamics again on the lower time frames, but if the market will want to trade lower today, I suspect that it's going to want to trade somewhere inside of this range. Okay, precisely, I don't know where, but gun to my head, I would say at least to 75% of the weekly BISI. Overall, we're still inside of the dealing range of Tuesday, right? So that's something. Okay, we'll look at that on the 1-hour chart. So in terms of daily levels, we can keep the same levels. The weekly fair value gap, the premium CB, currently price is trading around these levels. You can argue that a bearish order block has been created here. Maybe also a bearish breaker. Right, and you can see now that the low of this breaker, right, more or less aligns with 50% of the previous candle, right, give or take. We're talking more or less around the range of the high of the weekly BISI. So in my opinion, not favorable price action to see price going inside premium. To me, this is still telling me that price wants to revisit discounted levels, and so yeah, these two levels are still valid going inside of tomorrow and also for the weekly profile. On the 4-hour chart, again, still the same levels. We can see that the rejection block in discount had shown a lot of sensitivity. And what did today do? What did yesterday do? Right, yesterday again revisited these levels, again respected 50%, right, unable to displace 50% inside of early New York. New York actually expands out of it, right, because this is something that we're anticipating. We'll cover it again on the 1-hour chart. But then, right, revisits the 4-hour fair value gap. Season and institutional order flow entry drill, right? So this is kind of a sign that order flow is pretty heavy at the moment, and then displaces the range, right? You can see how it creates a 4-hour bearish order block through the discount rejection block from the 3-week look back, and this is pretty important in my opinion, because you can see how the market had found a lot of sensitivity first into it, tried to expand higher, but eventually failed. Again, creates the range of an order block there. So this is why I believe that very likely the market will, from a daily, from a weekly perspective, is going to want to revisit discounted levels. Okay, let's look at the 3-day look back. Let me remove the levels at the moment. If we look at the profiles of the last 3 days, what do we have? We have a consolidation back inside the range, right, or a retracement, if you want to call it that, represented by a bullish swing to Z, right, an expansion to consolidation. From there, price had a continuation of the overall trend that we're trading in, right? So expansion, consolidation, expansion, expansion, and then we have the previous day, okay, the previous day's range. Now, if you remember on the previous day's range, going inside the previous day's range, I mean, we had noted that the closure of this expansion, right? This was a bearish expansion. They represented through a New York reversal profile, but there was a reversal at the closure. Okay, and then at the open, right, price was kind of choppy. So the idea was that it was going to expand higher, either to create the low of the month and the low of week, or at least to revisit some kind of levels inside of a level inside of premium to then consolidate or reverse from there. And the market did do that. Right, you can see in fact the market ended up revisiting the range of the discount BPR. Okay, this is an important level because it's located right at 25% of the current dealing range. We're still trading inside of this dealing range. At 50% of the range there still is. We're still trading inside of this dealing range. An obvious fair value gap right at 50%. And then in premium you had the range of a 4-hour order block, 4-hour fair value gap, 1-hour fair value gap. But I won't put up those levels at the moment because they're not very relevant to me based on where price is trading at the moment. But you can see the idea of right, the idea where price had expanded and then it ended up being a retracement. I believe there was a consolidation, but the idea was that it was going to expand one last time, at least one last time, and because of the way this closed. And the market did do that. You can see in fact the pre-market session came back to 50% of the discount. This was a bounce price range, but whatever, overall an inefficiency, a fair value gap. And then non-farm CPI, expands out of the range. Right, creates a fair value gap, creates a bullish order block, creates a bullish breaker, and then consolidates into 930. Right, so the 930 longs here, very high probable long. Okay, because we were anticipating that the market was going to trade higher because the closure of the previous day came from an expansion. And price first revisited discount right before trading higher. So this is something that was anticipated, but then look what happens. Right, the market trades back inside the fair value gap located at 50% of the dealing range, and it fails. Right, it simply sweeps the PM session highs, and then it ends up failing. Right, it starts creating bearish fair value gaps, bearish order blocks, and it expands and consolidates inside of the discount BPR. So you can look at the 1-hour chart here, right? Look at 50% of both of these levels. Right, unable to displace, unable to displace, unable to displace, unable to displace, unable, and then finally does it, right? And creates the range of, overall you got a bearish order block here, you got a bearish order block here, you got a bearish breaker here. Right, and then yesterday okay, so what is this profile here? This is a New York reversal profile. Right, bearish New York reversal profile. Price came from expansion to expansion, to retracement, to expansion, and then again expansion, right? So reversal. Pretty significant bearish order flow here, right? The 4-hour IOFED, the New York reversal profile inside of the range. The market doesn't even need to come back to premium, right? It simply respects the range at 50% of the dealing range. And so, these two levels, in my opinion, are still valid, right? The fair value gap of 50% and the BPR in discount. But we can also look overall what the previous day left behind, right? Because the previous day was an expansion day, and we know, well, was a phase of expansion, not an expansion profile. This is a reversal. But overall, in terms of a phase of price delivery, this is considered to be an expansion profile. You can see the closure of the candle also very bearish here, right? Expansion at the closure. And what do we know about profiles that expand? We know that they tend to leave fair value gaps, order blocks, balanced price range, the rejection blocks. They tend to leave PD rays around 25 or 50% of the ranges. Okay, so we can maybe go down to a 15-minute. Alright, we can see what's located inside of this range. So let's grade from the previous high to the previous low. You can see that. Let's go back on a 1 hour chart. So right from 25% to 50% of the range, right here we have the range of a bearish breaker. Okay, this breaker is paired. Sorry, this breaker is also paired with the range of an order block, right? A bearish order block. There isn't any significant fair value gaps or any obvious fair value gaps. We do have one here created at the closure. Okay, so if the market is really bearish, it can trade to this level to create the high of day and trade lower. If it's extremely bearish, right, it can leave this fair value gap open, won't even need to revisit the range of the breaker, the order block, but simply can create a fair value gap. Sorry about that. Can create a fair value gap right at the open, okay, and trade off that fair value gap the whole day, right? So overall for tomorrow, I think that is going to be important to see how the previous sessions have traded coming inside of New York, because there's a couple different scenarios here. Now, I would prefer at this point in time the open high low close scenario, but I'm not counting out the idea that the range could become high resistance here, okay, because we're trading inside such of a dealing range, and if the market is going to be unable to displace the low, right, to revisit discount, or if it does so, right, and then starts trading around, say give or take 75% to the low of the weekly fair value gap, right, then at a key time of day starts rejecting, right, we could be seeing a, it could be a bullish swing to Z, could be also a classic buy, all depending on how low it goes before trading higher. Could be also a New York reversal. But gun to my head, if it's going to trade lower first, okay, before trading higher, and is going to need to come back inside of the range, I would suspect this to be some kind of New York reversal, right? New York would, bullish swing to Z, right? Where London or Asia would find a low, and then New York would come back inside of the range and kind of consolidate, especially if it starts opening around these ranges. Like I see, you got the range of, we saw that right at 50%, right? You get the range of a bearish breaker and a bearish order block left from the previous day. Right then, and what were to happen if the market, I don't know, for whatever reason, takes the low and then starts expanding? Well, it would use this breaker as a reclaimed order block, and it would create the range of a new bullish order, a new bullish order block. Okay, so that would be very bullish for the market. So overall, I'm looking at this breaker here. I think this is a pretty relevant breaker. Right, this was what? This was the pre-market. Right, on the lower time frames, this looked like a reversal. Price had traded inside of the discount BPR, sent prices higher as it should have, but then ended up failing, right? Um, Now, because the range didn't leave me, obvious fair value gaps, I had a much better idea here where the low or the high of the day could form. Here, I think there's right, and overall, because the closure here was bullish and then was consolidating, uh, in terms of potential development of profile, I think it was pretty obvious that it could have been this to this or this to this. But here, this range is pretty high resistance here, right? You can see that, in fact, there's not really any fair value gaps being created, or no obvious fair value gap being created. So per se, I'm in terms of a daily profile perspective, I want to see if the market is able to trade inside of this breaker. If it does, at what time of day does it trade into it? And once it does trade into it, what does it do? Right, does it expand into it and then create bearish fair value gaps? Does it expand into it, consolidate, and then expands? Right, that would do what? That would create here a bullish order block. Okay, so I really want to see if the daily profile is able to make a high of day inside of this level. If it cannot make a high of day, then I believe at these levels and price will trade higher, then I believe there will be a trading opportunity using these quadrants, okay, either through an order block created or a bullish fair value gap created around this range, right? Or at least, the expansion that leads inside of this range, right? The fair value gap could be retraced to, and then price would trade higher from there. Okay, so this is in the event that price first trades higher before it trades lower, and we'll need to revisit this. Now, if the day will be very bearish, right, it could simply say, I don't know, revisit this fair value gap or this fair value gap and trade lower, right? Trade towards 75% or the low, right? Or there's a daily order block here inside of located around the low of the weekly fair value gap. Maybe that can be the objective for the day, right? We're looking at a range of 2,000 ticks or so. And finally, I think that the last scenario that could happen is a scenario where from the open the market drops lower, ends up revisiting, 75%, that range of the low of the weekly fair value gap, basically the lower half of the weekly fair value gap, right, and then comes back inside of the range. This to me would probably look like, again, some kind of London swing to Z, but it would all depend on the profiles in the moment. I mean, this could be a classic buy, this could be a New York reversal, this could be a bullish swing to Z. There's too many scenarios, okay, that could happen. So, but overall, the idea is, right, if the market will revisit this breaker, how's it going to trade around it? And at what time of day does it trade around it? What does it leave out of it, right, or through it? Okay, either out of it or through it. If the market will trade in discount, we're looking at the range of the lower half of the daily, this is a weekly fair value gap. Okay, so these can be targets for your shorts, or they can frame narrative around the daily profile that you're anticipating if you believe that at the point in time where you're trading, okay, say the New York session and price in London or in pre-market comes from an expansion from those levels, right? You want to see where it did it. Did it do it around this fair value gap, right? There needs to be a reason why price would need to come back in the range, is what I'm saying. In terms of standard deviations, I think that, right, since currently the market has proved to us that it wants to keep trading lower, I think we can put up the standard deviations from the shakeout of Tuesday. I would assume that these align with the weekly BISI. which aligns here with the lower half of the weekly BISI at these levels. I can see 2 to 2.5 brings us right around that range, right? This is that range around 75% of the weekly fair value gap, and around 2 to 2.5 is where you find that. So you find the daily order block here. Okay, so this range here could be, sorry, these levels here, we're talking about the range around 28,000, give or take. This could be where the low of day forms, okay, either for a sell profile or for a buy profile or for a consolidation profile, right, like a swing to Z. Okay, so in discount, I'm looking to have that range, the range around 28,000 to 28 to 27,800, give or take. And in premium, I'm looking at what the previous day left behind, right? Previous day, remember, was an expansion phase. This range left behind the range of a breaker, located right at 50% of the range. Okay, so if the market is going to first trade higher to then trade lower, I want to see how does it trade into here. And last scenario is, again, price only revisits some of these fair value gaps here and starts trading lower from there. Okay, so I'm actually going to put up the levels on the weekly on this chart. Right, so I think that this should be enough for tomorrow, okay, to identify the low of day, the high of day tomorrow. In my opinion, right, you got your discount level, you got your premium level. I think that both of these should be enough for you to gauge order flow. We looked at the different scenarios. We looked at the standard deviations have this range. Maybe we can go down on a lower time frame and look at the range of standard deviations here. Right, so again, brings us around the same range, right? Currently, we're trading at 2 to 2.5, right? So this would be a good opportunity for price to pull back in the range, revisit, the range of fair value gap of overall the breaker, to then trade lower. This is my best case scenario. If it doesn't happen, then right, and just starts trading lower directly from discount here, then we'll have to see how the lower half of the weekly BISI is treated. Okay, so keep these two levels on your chart, discount level, premium level. I think that these should be enough for you to gauge order flow in the moment.